Hey guys, welcome back to our YouTube channel, Accounts Guru Cool. Learn accounting online. So today we are here to discuss about unbilled revenue versus unearned revenue and why the difference mattered. So considering these two terms, it's important for us to know that why the difference matters between these two concepts. One is unbilled revenue, second is unearned revenue. Either that both is going to be treated as assets for us, or how the different meaning. Unbilled revenue is going to be somewhere else and unearned revenue going to be reported somewhere else. Thus all is going to be need to have the clear understanding about this concept, and that's what we are going to discuss. We are going to discuss about also meaning of unbilled revenue, also meaning of unearned revenue. Is there any other nomenclature for all these things? Why the difference is going to matter? We are going to consider the examples for that, where it's going to be park unbilled revenue, where it's going to be park unearned revenue, how we are going to do the entry for that. That everything we have to discuss here. And considering the R2R, it's important for us to know that what's the meaning of these concepts and how it's going to impact in the reporting. So considering that we are here to discuss on this, so request viewers to be with us till the end to know more about this, and request viewers to like, share, and subscribe our channel to get in more clarity about accounting and finance. And if you want to go for any sort of training related to R2R, P2P, O2C, FP&A, or any software related training, so you can connect with us on our email ID accounts.gurucool@yahoo.com. So we'll jump towards that to know what's mean by unbilled revenue. So the concept of that unbilled revenue itself, that word itself is going to explain what it's mean by unbilled revenue. The unbilled, it means that which is not yet billed. Unbilled, which is not yet billed revenue. So unbilled revenue means the revenue which we have not yet billed. That's the meaning of unbilled revenue. The revenue yet to be invoiced for services provided. The important is that as per the revenue recognition AS9, when you are eligible to recognize the revenue as soon as you deliver the goods, provided the services, transfer the ownership, possession, risk, then you are eligible to consider that as a revenue for you. But in case when you provided the services, but you haven't yet raised the invoice on your customer, so how it's going to be treated in accrual concept? Knowing that the accrual concept says you have to book the revenue as and when that's on, irrespective either you raise the invoice for that or not. So the unbilled revenue going to come to ensure the protect the interest rules related to the accrual concept. So revenue yet to be invoiced for services provided. If you delivered any services for that particular month, but you haven't raised the invoice on your customer, so you need to take into consideration this unbilled revenue. That's the meaning of unbilled revenue. Unearned revenue. Now, the next is going to be unbilled revenue versus unearned revenue. Knowing that the unbilled revenue, it means we provided the services, but we haven't billed. It means that's going to be asset for us. So amount is going to be received from the customers as soon as we raise the invoice. But what it means towards the unearned revenue. So the unearned revenue, it means when your customer paid you in advance, but he paid considering you are going to deliver the services in the future. You haven't yet delivered the services. So whatever amount you received in advance, knowing that you have to provide the services in the future, that's going to be considered as unearned revenue. The concept is going to be says payment received in advance for it to be rendered the services. So you received a certain payment from your customers, but you haven't delivered the services. Your service is going to deliver in the future, and you received that as an advance payment. That's going to be considered as unearned revenue. In case of unbilled, revenue is yet to be invoiced, and here you receive the advance for it to be rendered the services. So the concept is opposite, unbilled revenue versus unearned revenue. And the word itself is going to say opposite, says if the unbilled revenue is your assets, then unearned revenue is going to be liability for you. So you took the commitment that you are going to render the services. That commitment itself is going to be considered as a liability for you. So unearned revenue is going to park towards the liability. So the condition is that you are going to deliver the services. And if you haven't delivered, you are liable to refund that amount to the customer. So here you are taking the responsibility. You are liable to deliver the services, render the services. So, and as soon as you render the service, the revenue is going to be generated. So that's the unearned revenue, payment received in advance for it to be rendered the services. And that's the unbilled revenue. What else is unbilled revenue known as? So the most of the times in accounting and finance, for each and every concept, you are able to see the n number of different nomenclatures. And sometimes it's going to be a little bit confused, says that I know the unbilled revenue, but I don't know the another meaning of that. If someone is going to ask you what is accrued revenue, so you are going to confuse. You are going to say that I know the unbilled revenue, but I don't have any idea about the accrued revenue, boss. What else is unbilled revenue known as? So, unbilled revenue is also known as accrued revenue, unbilled account receivables, and unbilled receivables. So, that's different nomenclatures for unbilled revenue. Similarly, for unearned revenue as well, we have the n number of, or you can say instead of n number of, we have the different nomenclatures for that as well. So, it's going to say is that it is also known as deferred revenue, prepaid revenue, customer deposit, and advance from customer. So unearned revenue, where the advance is received, deferred revenue is going to be treated as when we uh, raise the invoice for the future period and we receive the amount, but we haven't delivered the services. Advance is going to receive against the performer invoice or as per the PO. So the advance received in advance from customer, and you can say the deferred revenue, prepaid revenue, customer deposits, that's all is going to be how the nomenclature towards unearned revenue. Next is going to be how should unbilled revenue be accounted for, how you are going to do the accounted, how you are going to be accounted for unbilled revenue. The unbilled revenue should be treated as an asset until the customer can be billed. It should be moved to accounts receivables when the customer is billed. So the unbilled revenue is going to be treated as an asset till the time that's not going to be billed to the customers. As soon as you bill, that's going to do the reverse, and account receivable is going to be there in the system. Similarly, how should unearned revenue be accounted for? Unearned revenue should be treated as a liability because it represents a service or product that you are obligated to provide in the future. So here you are taking the responsibility, ownership, and commitment that you are going to provide that services or product in the future. So that's a liability for us. Example, for unbilled revenue, your company provides services throughout the month, but you generate the invoices at the first day of next month. The services provided during the current month are unbilled until invoicing happens. So this is one of the examples, is that uh, you provided the services throughout the month, but you raise the bill once the month is over in a very first week or first day of the following month. So when you're doing the closure of the previous month, and giving the example is that considering this August, if we do provide the professional services for the entire month, but we raise the invoice on the first of the following month, that's on September. So it's going to be treat as unbilled revenue for August. When I'm going to close my August books, So I'm going to consider that as an unbilled revenue in my books of account. And as soon as I raise the invoice in the following month, that's going to be do the reversals and actual AR is going to be there. So that's the unbilled revenue. Coming back to the unearned revenue, a customer pays upfront for a year-long subscription to your software solutions. The revenue is unearned until you deliver the services progressively over the subscription period. So if you if you received some advance or customer pays upfront for you for 1 year to deliver the services. So the revenue is unearned until you deliver the services. Progressively over the subscription period, you're going to book the revenue in the books of account. That's going to be considered as unearned revenue. Journal entry, unbilled revenue. So unbilled revenue, when it's going to be coming to the picture, so your entry is going to be unbilled revenue account debit. That's going to be the asset to revenue account credit. That's going to be your income. This is going to be 1 minute. This is going to be your income. Okay. So unbilled revenue is going to be treated as unbilled revenue as an asset to revenue account, and revenue account is going to be part towards P&L as an income. So here you can do as an unbilled revenue asset account, unbilled revenue account. So in revenue as well, that's going to be how the different nomenclatures as an unbilled revenue. Coming back to unearned revenue, that's going to be as in when you receive the amount as an advance, then your bank account is going to debit, that's as an assets, to unearned revenue account credit, and that's your liability. Unearned revenue is going to be treated as a liability, and the amount what you have received from your customer as an advance is going to be parked towards unearned revenue, the bank account debit to unearned revenue account credit. That's going to be the journal entry. So that's all from this unearned revenue versus unbilled revenue, or unbilled revenue versus unearned revenue, and why the difference matter. So difference is going to be matter from the accounting standpoint, from the conceptual standpoint, from the MI standpoint. They both have the different meaning. Unbilled revenue is going to be treated as assets versus unearned revenue is going to be treated as a liability for you. Unbilled revenue, once you raise the invoice, that's going to be considered as a revenue, or it's going to transfer towards the account receivables. Unearned revenue, as soon as you deliver the services, render the services, that's going to be booked as a revenue. So that's the difference between these two concepts related to unbilled revenue versus unearned revenue. Thanks, guys, for being with us till the end of this. Request viewers to like, share, and subscribe our channel to get a more insight related to accounting and finance. In addition to that, if you are looking for any sort of training related to accounting and finance, you can connect with us. You can connect with us on our email ID accounts.gurukul@yahoo.com. And if you are looking for any sort of consultancy related to accounting and finance, you can connect with us on finance@divedeeperllp.in. And if you need any sort of more insight related to accounting and finance, or if you are looking for any you are looking for any clarity about any concept related to accounting and finance, you can put it in the comment. We will create the content on that and we will make it available for all our viewers. Once again, thanks guys for being with us till the end. Thank you.